Good morning, good afternoon, good evening, traders from across the globe. Welcome to our 712th installment of Short-Term Trading Live with Oscar. This video is being filmed on Wednesday night for trading Thursday. That's March 24th, 2011. Futures trading is risky and can cause substantial financial loss. If you do not understand this game or do not have risk capital to lose, please do not play in the futures arena. For you traders out there who do understand this game, we have something nice on the board today. Go, baby, go, go, go. What do we have? The indices are following the leader, the Dow Jones Transportation Average, higher, and we say for Thursday to buy the dips. Traders, if you recall the last 5 videos, I've been showing you how the Dow Jones Transportation Average has been adhering to our 65% false breakout rule. Well, what the market has done since is gotten back above the pennant, came back and held the top line as support, and is now ready to take off, and that should pull the other indices with them. So I think indices higher. In fact, if I reach over here and grab one of my little arrows, I have a green OMNI for tomorrow, baby. Yeah. You gotta love those green OMNIs. All right, traders, what I'd like to say is this. First off, Neil Cavuto, thank you so much for allowing me on your program today. Neil, I think that we have a valid point here about speculators in crude. Your show is great, and I gotta say, Neil, I don't know if you watch these videos or not, but I watched your gag reel the other day where you're responding to viewer mail. Boy, oh boy, my heart goes out to you. I could not stop laughing. You and I have to sit and talk someday. We have some war stories to share. So I get your point. You made me laugh. I know what you're going through, my friend. All right, enough of that. I'd love to come back on the show anytime, but traders, let's get back to what we want to do here. Transportation average goes higher. We want to buy the dips. The 65% rule worked perfectly. Let me show you a few charts. Okay, traders, the first chart before your eyes this evening is the leader of U.S. indices, the Dow Jones Transportation Average. As you know, our 65% breakout rule has worked perfectly. As you can see, right near the arrow where it says 65%, we did break down a false breakout at around the 65% area of that pennant. Then we rallied back through it, got out above the pennant, and look what happened today as of Wednesday's trading. We backed down to the top line of that pennant, held it and rallied up and settled at the highs, basically putting in a swing day towards the upside and a successful hold of the breakout of the pennant. You gotta love the leader, Dow Jones Transportation Average, along with some bullish indicators. So there's your leader. Let's look at the next leader. Okay, traders, next, the Russell daily bar chart, the Russell 2000, looks like it's about to test, if not break out above this flag-looking resistance or parallel channel. Looks to me like this is also possibly an inverted head and shoulders building, but for now, let's just call that a parallel channel or a bullish-looking flag that we are about to break out of, or at least test the resistance up here. But according to what we've been witnessing, the Dow Jones Transportation Average will likely pull the Russell higher on Thursday. Now let's go look at the E-mini S&P, because I think you will find this next set of charts interesting. Okay, traders, now we are looking at the E-mini S&P, the one we love to trade. As you can see, we've gotten above that channel resistance, and we held the OMNI average very nicely. So support has held. We've now turned what was resistance into support. And I think the next chart will show you that we will likely be just viewing a bullish flag that's forming right now, if not just about finished forming. Look at the next graph. Okay, traders, the highlighted area in yellow will likely be remembered as a small bull flag, not a flat top, as some would think that is right there. That is likely going to be just remembered as a bull flag and a breakout for the S&P, and that's what we're expecting on Thursday. Now, there's one more very interesting view that we have of this S&P daily bar chart. Let's take a look. Okay, traders, the E-mini S&P daily bar once again. Is this an inverted head and shoulders building? You have a left shoulder, then the head, which is below because it's inverted. Is the right shoulder about to build? If we only put in the right shoulder, we should easily go as high as the 1330s, maybe as high as 1340, just filling in where it says 1330s and the 3 question marks. So there's a lot of bullish looking formation here. There's a lot of reasons to think the S&P can go higher. And basically the only thing that can stop it is crude oil getting above 110, 115. If we could keep crude oil tame, I think our recovery in our stock markets and our economic recovery continues. Let's hope crude stays down and the E-mini S&P goes higher. So, traders, you've seen my charts. There's my technical argument for why we have the green OMNI, baby, for Thursday. Do yourselves a favor, pull your own charts, do your own homework, take a look and see if you do agree with the upside. Never, ever trade without stops because, as we know, a stop is your best friend. And if you do trade without stops, sooner or later you will be nothing more than a statistic and will be carried out of this business. Traders, always put your stops in. They do not panic when the market comes after them. They get stopped out and do their job. Put your stops in. All right, traders, listen up. If you like the analysis I teach in these videos, fill out an application for OMNI Camp. It is May, towards the end of May. If you fill out your applications now, I will personally call you before we book the exact date and qualify you. All right, that's about it. Don't trade alone. Come to my site, livewithoscar.com. Come into my free trading rooms and allow me to help you understand the analysis that I just put before you. All right, traders, that's about it. I'm out of here. I'll see you at the site. Remember to keep your emotions out of trading. One of the best ways for you to do that is to say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.